From the morning reading, Dow Jones Global Index continues to plunge. Foreign losses continue to deepen. European stocks are down another 1%, while Chinese stocks are losing more ground. EAFE shares are down 2%, while emerging markets, EEM, are falling 3%. A stronger dollar is hurting foreign stock ETFs even more because they're quoted in dollars. The stronger dollar is pushing commodity prices sharply lower, which is hurting commodity stocks, including gold and silver. Copper shares are the weakest part of the very weak material sector. A plunge in semiconductors threatens to pull the plug on the technology spider sector below its 200-day moving average. With bond prices rising, the only winners today are the defensive groups like consumer staples, utilities, and REITs. Dow and S&P 500 fall below the 200-day moving lines. Dow Industrials falling to a new 5-month low after dropping below the 200-day moving line yesterday. The S&P 500 is in danger of breaking the 200-day moving line. A close by the SPX below that support line would signal that U.S. stocks are entering a downside correction along with the rest of the world. However, that didn't quite finish that way. The Dow and the SPX regained the 200-day line in an afternoon rally that has the look of a potential upside reversal day that has allowed the Dow and the S&P to regain their 200-day moving lines. The afternoon's turnaround is a short-term improvement for the market and prevented a serious breakdown. Whether or not the U.S. stocks can build on today's gain may depend on what foreign markets do tomorrow. This is the first time in history that the SPY went from a 3-month low to a 5-day high in the same session. It happened once in the futures on December the 2nd, 1991, which happened to lead to a 10% rally over the next month. When Spider lost 0.5% intraday to a 3-month low, then rallied to close in positive territory during a bull market, then it rose over the next week 11 out of 13 times. If an intraday loss was greater than 1%, then the next week was up 7 out of 8 times. Longer term returns were mostly positive but less consistent than the shorter term. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:37 a.m. Central Time, and I'm recording this in preparation for the market day of July the 8th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see just what happened in the overnight, and indeed, it was another interesting night. So we had the big move down. It broke through that key level last night, yesterday, and then huge reversal intraday, but then overnight action again weak. And let's take a look at the chart and see here what I'm talking about. So here's your SPX, and you look at this huge reversal. We broke that key level I spoke about yesterday, and I told you that if it broke that level, we'll likely go down to this 2039 area. And sure enough, it turned a little bit in front of that by about 4 points, but clearly made the greatest part of that distance from this shelf all the way down to the next support area. Then huge reversal closing near the highs of the day, and we see the same thing in some of the other markets. Here's the Russell. Look at that wick, huge reversal. NASDAQ, again, enormous reversal, up candle for the day. And then the Dow, same thing. But look at the overnight. Overnight, we had at one point almost lost everything that we had regained in yesterday's rally, and even now we're still well down from yesterday's close. So where does that leave us? It's a tricky thing. Indeed, if you look at our morning report, all 4 broad market indices are down sharply, with the ES down about 16 points, or about 0.75%. The Russell down over 1% at about 1.25%. NASDAQ down 0.8. Dow down about 0.75%. This is the time of the cut. Obviously, things are very, very fluid, and these are bound to continue to change between now and the market open. Crude oil up about 0.5%, euro up almost 0.5%, bonds up about 0.75%, and gold up marginally. In terms of overseas action, wow, look at China. China got crushed, down 5.9%. It is in full-fledged bear market correction. Hong Kong down almost the same. Japan down over 3%. Germany up marginally. United Kingdom up more so at about 0.6%. In terms of macroeconomic reports for today, we have FOMC minutes. So that will be very important, and that will occur shortly after lunch. You also have crude oil inventory. So for you that trade the crude oil, you need to be standing aside during that release. And Thursday, we have the usual unemployment claims. You have an FOMC member speaking during the market, so that's always something to be aware of. And it looks like that's about it there. In terms of volatility, obviously we've seen a good bit of volatility of late. And this is one of the things why I illustrate these standard deviation moves. Now, while we didn't actually, between close to close, put in a standard deviation move yesterday, you sometimes have to be able to take a look at those charts and see just what's going on. Because here, short-term VIX, 15.91, not a lot of fear. IV percentiles, 33, that's the bottom third, 40, 34, 53, nothing really extraordinary there. You look here, you'd think, oh, nothing happened yesterday, less than a standard deviation move. But the reality is that when you look at the chart, it was anything but a quiet, calm, inside type of day. I mean, the last 3 days, we'll call it the last 2.5 days, trading day. Well, this is on the ES, so it's a futures market. Let me go ahead and flip over to the day. You've had some big candles here of late. And of course, this was a 3 standard deviation move, but this counted as less than 1 standard deviation because of the action between the close and the open. And yet, during the day, obviously, you had this huge reversal pattern. In fact, we can go to the 5-minute. And you'll see that action. I mean, what a day. Way down and then way up and closing near the tops. But when we go to the ES, you see the overnight action here. And look at this. I mean, so we get the market closed back here. And then just weakness all night until we got down here to that similar place. I mean, so look at where it turned. It turned at about the same place yesterday's low was, and then the bulls came back in again. So there seems to be some institutional awareness of that level, and certainly that's something to keep in mind should we get back there today during the day session. But at the same time, every time we come down there and visit that level, we're likely to be eroding some of that support, and eventually it could break through. If it does break through, where does that take us? Wow, I mean, if we break through that 2039 area, it could get really ugly, and we could fall all the way down to this 100% retracement down towards the 1980. Likely would see some support at 2025 and then support at 2000 just because of the effect of big round numbers and key levels for institutions. But obviously, we're breaking below all the key moving average lines. If we were to close down here at that 2038 area, that'd be below the 200-day moving average, and that has huge implications to institutions and those buy and hold crowd who like to hold as much as possible through all what they think is the little stuff. And and then will capitulate if you get closes below the 200. So we're tickling those kinds of levels, and putting significant fear into broad margins of the economy. In terms of our daily report, we're still calling this phase 5, the break of diagonal and horizontal support. IBD status still uptrend under pressure, with the accumulation distribution scores in the S&P of a C and a NASDAQ of a D+. GMI index is in a outright sell signal. The stock charts status has seen some flipping on the intermediate term. Obviously, big reversal day yesterday, so we saw some neutrals come in, but still, in terms of being a bull, I mean, there's not much green on here, and in broader context, it's not a very healthy market. Intermediate term market posture actually went to mildly bullish, and this is a first day mild weak bull setting. It did turn up. We're at 24 in the S&P. Dow just barely at weak bull at 20.5. NASDAQ 24.2, and Russell maintained a weak bull as well at a 29. So don't put too much into these. These are very, very weak bulls, about as weak as they get, and they're also first day. We often see flip-flopping when we're in these kinds of conditions. But as a result of that yesterday reversal, we did reduce the hedge warning status from 3, it only was at 3 for one day, to a 2. Remember, we talked about the potential yesterday for, just when you go to those higher risk levels is where the bulls do come in and often have that reversal. So we thought that there could be a very much elevated assessment of risk in the market, and yet at the same time, we're not necessarily calling for an outright breakdown and correction. That reversal did come in yesterday, and that is significant. However, we could very easily make this a 2+, and I could have left it flat out as a 3, given what we know now with the overnight action. Again, very much weakness. So bottom line is that this is an elevated level of risk. We did have a number of other measures that kind of ebbed and flowed yesterday. Volatility, cross relationship, short term still are okay. We still have a high distribution day count, but it did not increase. S&P 7, NASDAQ 5. We had a very, very high new low count on the New York Stock Exchange of 944. Very, very high number there. All 5 risk aversion indicators are still flagging as risk off. So put all this together with what we see in the charts and so forth, this is clearly continues to be a not healthy market for the bulls. Option income strategies, special opinions here. VIX is inside the acceptable window, but technical volatility conditions are and technically volatility conditions are acceptable, but consider the potential for increased volatility and the fact that we are at hedge level 2, and really could make a case for even 3 there. Covered call strategies. Novice traders should not initiate new positions in this current environment. Aggressive traders should probably look for something around a 1-to-1 distribution between in the money and out of the money strikes. Put selling. Conditions not acceptable for new core put portfolio positions. Aggressive traders consider put credit spreads with defined risk and consider scaling into your positions until you have a market and a confirmed bullish posture. And clearly, we do not have that right now. In terms of sector specific, pretty much a rainbow here. Obviously, certain sectors have, when given a little bit of broad market bullishness, tend to be the first ones to be healthy. Healthcare, consumer discretionary, consumer staples, retail, we've seen those over and over this year as being the healthier ones. But transportation, this is not good for broad market. Transportation continues to struggle. Telecom down. Energy continues to get crushed. And industrials also. Materials, we talked about that a little bit in the notes from the morning reading at the beginning of the video. Materials continue to be hurt in a big way. Obviously, dollar impacting much of this. Percent change, you see, except for materials, which we just talked about, a good day. Utilities big day. And in fact, I was watching a Duke position. I had a Duke position hit its profit target yesterday. So it was a good day for utilities. Consumer staples also up very big. But this could likely, change in an overnight. It's been that kind of market lately. So lots of crisscrossing patterns. That should be enough for today. If you find what you get in here is helpful to your trading and of interest, we greatly appreciate you sharing that with your fellow traders. Like us on YouTube, retweet us to your Twitter followers, etc., stock twits, etc. We're there, and greatly appreciate your support. If you're interested in other things that we're doing, here's the website. Disclaimers as always. Hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market open for the market preview. Thank you and good trading.